Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Today is Wednesday, so we have, what do we have? We have a level 3 group tutorial session today talking options deltas, silver options insurance plan, TRI secret options formula. Yeah. Anyway, so that's what's on the docket today. We had our TRI secret options formula meeting last night, all our OG killer stock pickers. And Kevin was on the call today in the daily brief, and actually the first time I've had this happen, but tech issues for Brian. I dropped out about halfway through the call, so go figure. Suppose it has to happen to even the best of us. So I thought the community was pretty well served by Kevin, and I think he's a very rational investor. I like how his approach. So very down to earth, very calm, very banging out doubles. As for you guys and sort of the public message, lots of chop. I think probably the breadth indicator probably clearly illustrates choppy, choppy, choppy. It's a pretty volatile market. There's no doubt about it. Technically we are in a buy mode. Not really egregiously overbought, so it doesn't really sort of set up a short, but it's kind of wishy-washy. The old adage goes, buy when it snows, sell when it goes, and here we are in the middle of February, and ironically enough, as an old commodities broker, the sales pitch was buy your unleaded gasoline the middle of February, sell it the middle of May, and you made money 9 out of the past 10 years. So here we are, the latter part of February. Should it surprise us that the energy market is moving higher here? I don't think so. I think I conveyed this message to you recently, but it's not the screen we want to show you. Where's the screen we want to show you? Good old Bitcoin! A Bitcoin, gotta love that Bitcoin, but that's not what I want to show you. Where is it? Here it is. US dollar, I get the whole impression the whole market was sort of setting up there, as it should, for Fed testimony in front of the US Congress. What are you doing to us, you damn bankers? I don't think the message really changed. I didn't really hear anything new out of him. What I did hear was just sort of like, hey, COVID's the problem, fix COVID, and everything will take care of itself. And I have to say, I probably agree with him. If there were any sort of excesses or anything that were being built into that last cycle because it was so long, they sure have been addressed. And he did say that, coming out the other side, once the sort of COVID problem's been dealt with and people are like, okay, no more, runaway sickness that we have no sort of control over. Once that's been sort of established, then I think we go into, all right, now you people have to pay your bills and settle your debts. That's not the environment now, and really, I don't think that happens until maybe next fall. Like, if we head into next fall, the whole damn world's been vaccinated over the next 6-8 months, and if everything goes okay, and of course that's a big if, I think they start the cleanup process. The interesting thing is Powell himself said a couple times even today that, if we can get on top of this sickness, you might actually find that the economy just goes absolutely apeshit to the upside here, which really is what should happen here at this point in this cycle. I mean, there's the kick in the pants. Remember, Klaus wants all your equity. What we actually have to be thinking about, which is so bizarre and it's so hard to convey this message, is the world economy is getting ready to grow, and you better, if you want to, if you want to participate, you better be in position, because at some point, right, this is going to stop doing this, and it's going to start doing this shit. I don't know whether we're ready for that just yet. Like, I think we're still right in the muck here. You can kind of see. Next year, so it could be, dicey. Especially if this fall it turns out no, we didn't vaccinate everybody and there's another big wave of this shit. Maybe that's what has to happen here. But the long and short of it here is get ready. This world's going to grow, and it's going to grow hard. Roaring 20s, all that kind of analogy. Wouldn't surprise me if we hear a lot of similar talk. And it'll be latter part of this decade. We're right at the beginning. Usually the beginning of every decade is shitty. I remember 1981, 82. That's when they marked the bottom in the market. That was a bad time. There was a recession around that. 90, 91, 92. That was George Bush's little mini crash in the market. George Bush Sr. And read my lips, no new taxes. And then he went and raised taxes. And, of course, the electorate got all pissed off and kicked him out of office. But that was a recession. 2001, 2002, of course, you know all about that. The dot-com market blow up and the recession there. 2010, 2011, really the break in the market was 2008, obviously, and it was sort of mired in that turn. And here we are in another, and it's funny, I used to tell students this all the time. Recessions, you can pretty much set your watch. They happen in years that end in 8, 9, 0s, 1s, and 2s. This is the shitty part of the cycle. So once we get to 2023, 2024, 2025, my hunch is life's probably going to be a hell of a lot better. But for now, we just got to get through the mess. And I think a big part of the mess right now is the central bankers have said, look, you come borrow as much money as you want. We're turning the spigots all on. We will not let this economy break, but, understand that's probably going to inject a whole shitload of price inflation, which I think you have to expect it's coming. Unfortunately, it seems this cycle, the low-hanging, low-education jobs in our society are slowly disappearing. And that's a bad sign for people who don't want to, put in the time and effort to educate themselves. It sucks, but that is reality. I suppose if you're born in some sort of banker family and you've got that guaranteed profit margin in place, mind you, even the bankers, if I wanted to be a banker, I had to go do economics and all that, so, even they have to invest in their education to a certain degree. But just getting a job flipping burgers, I got a funny feeling those kind of jobs, they may just be an icon of a previous bygone era. Those low-hanging service jobs just may not come back. And even Powell, even in his speech today, said that, a lot of those low-hanging jobs, they are now, as we speak, they are being replaced by robots. So, well. Hey, you've seen those tweets I put out, help wanted, humans need not apply. You say it tongue-in-cheek ahead of the event, but here is the reality. Oh, boy. So learn how to trade, take advantage of these markets, and you can be the king of your own castle. All right, rant, rhetoric. When are you actually going to tell me something I can use? U.S. dollar index, hurry up and do nothing. Was interesting to see it rallied smartly out of the gate here this morning. Don't think there's really any catalyst one way or the other here today. Stock market says Uncle Jerome has come in and basically, once again, Fed put, whatever you want to call it, markets turned on a dime as soon as they sort of heard the message from him. We bankers are not going to shit on you. Also, too, probably adding fuel to the fire, Mr. Powell explicitly said, expect price inflation. So that gives a green light. He also said that he did not see bubbles, asset bubbles. And I guess what bothers me about these central bankers is his definition of price inflation is very, very different than everybody else's definition of price inflation. The message that I heard here is that he doesn't really give a shit if the price of a loaf of bread doubles, triples, quadruples at the grocery store. He doesn't care. What he doesn't want to see is he doesn't want to see the idea that workers can demand more money and that employers will pay them more money, and that cycle of expecting wage increases gets start priced into the economy. That, I think, is his definition of inflation. And since workers really have very few rights right now, that and workers technically make up about, I think, about 2/3 of the cost of doing business. He's very happy as long as he sees that trend that the workers, they're not really able to price their labor. There's just a ridiculous oversupply of humans on this planet. So, they don't have any purchasing power with their labor. As long as he sees that, then I think he's happy that there's really no quote unquote inflation. So, ironically enough, these interest rate cycles are about 70 years in duration. We took 35 years to go from like 1980, 81, 82. That was the top in inflation problem. And here we are 30, 40 years later. Now we're at the bottom of the inflation problem. The only problem was that through this particular part of the cycle, we were actually supposed to see deflation, where, all that surplus labor supply drives prices down. Where globalization, roboticization, if that is a word, would create lower costs. The problem there, of course, is that doesn't fit into the bankers' sort of plan of this sort of tax on society called inflation, which really doesn't have to exist. It's just it started with the goldsmiths. They turned into bankers. Now they are central bankers. This is a long history. 200 years ago, about 250 years ago, this concept of the union, this breaking away of the oligarch, aristocratic sort of framework of how the world should work. That was basically in place for thousands of years. The bankers, in essence, got pretty much bitch slapped by this gentleman by the name of Andrew Jackson down in the United States. And they lost a lot of money. And I believe that they basically made a covenant that they were going to destroy the Union. They tried through the U.S. Civil War, and Mr. Abraham Lincoln stood up to them. One might argue that Mr. Woodrow Wilson really did the United States of America a huge disservice letting the central bankers back in 1913. That's the whole Jekyll Island issue. Roosevelt tried to deal with the Great Depression, but you could argue the Great Depression was exacerbated by the bankers. And unfortunately, I think he had to kind of do a deal with the devil through that, and the bankers basically stole all of the gold of the United States of America out from underneath it, which is so sad. JFK, he to a certain degree tried to rein in these silly bankers, get sort of the U.S. minting its currency, and unfortunately, Mr. Kennedy didn't make a lot of friends, and were the bankers part of his demise? I don't know. Actually, I believe that Mr. Reagan came to Washington trying as a liberator. And unfortunately, the bankers reminded him who was in control. Because remember, somebody took a shot at Mr. Reagan. Of course, nobody ever investigated any of that. And he quickly towed the party line. I might argue that George Bush Sr. kind of didn't like this voodoo economics nonsense of the bankers. In a weird sort of way, I think he was undone by something that came out of left field, Ross Perot. But could Ross have been helped along by the bankers to try and get rid of Bush? I don't know. It's a tough one. I get the impression Mr. Bush Sr. kind of just after that said, fuck it, man. I'm going to put things in place that are just going to rape the shit out of this country. You fuck me, I'm going to fuck you right back. And so we got, Mr. Cheney and War on Terrors and all that kind of stuff. Keep in mind, the Bush family did very well through the Carlyle Group, through all that. And, they set up like secret funding projects. Yeah, I don't even know if you're aware, but, people in the United States of America, you fund a whole bunch of secret projects that just go on billions and billions of dollars. And there's no oversight, there's no accountability. And I'm sure the Bush family and the Cheney family and all that are at the head of all those things. And it's impossible to even control them. It's remarkable how this crazy world works. You can't write better fiction than reality, eh? So, lots of fun. Why am I going on to all this stuff? I think we just have to understand that there is sort of like an oligarchy that sort of controls our society. The bankers won. If they want to, the descendants of the Rothschilds, I guess, they could exact revenge on this thing called the Union and dissolve it. I get the impression that the politicians know that and they understand that. They all kiss the bankers' asses just royally when they come to Washington to talk to them, which I find hilarious. It is interesting. Some of the testimony today, though, I thought was really fascinating, where there's even like a hierarchy within the bank culture. So one politician who obviously represents like regional banks, he was asking politely if the regional banks could be included in conversations about things like digital dollars and digital Fed notes or whatever. And Mr. Powell said, well, we'll think about it. So there's even hierarchy within the banking industry. And I think that's important for us to understand. It's not like it's just the banks against the public. It's almost like there's like a little cartel that sort of pulls all the strings. And as I said, their point man right now is Mr. Powell. Mr. Powell actually is a fascinating gentleman, and one of the politicians even today said he thought that Mr. Powell was the most approachable of all Fed governors he's ever worked with. So he's an interesting sort of face for the U.S. Federal Reserve. I don't think the U.S. Federal Reserve has ever had sort of as friendly a face. So it does make our times very interesting that we're living. Do you believe Jerome Powell? Is that what his name is? Or is he like a wolf in sheep's clothing? And really, did notice a couple times they asked him about references to Federal Reserve Board integrity, and he touched his face very quickly when he said, "Oh yes, you can trust the Fed," and instantly he touched his nose. Lying. I thought that was hilarious. If you understand police psychology and interview tactics and human behavior, I used to have to do that when I sit down with clients and try and figure out what their real financial picture is. Where are they lying? Where are they not? One of the key tells was if you ask somebody a question and their answer, they instantly touch their face, you pretty much know that maybe it's not the truth. Oh, well, what can you do? Because it is Fed speech kind of day, and I think the market was a bit skittish ahead of the Fed. Were the bankers going to pull the rug out? And keep in mind, any day if they come along and say, you know what, enough is enough, I think the market's going to really come off. It keeps setting itself up like the S&Ps here. It set itself up like, okay, if we get the green light to dump, it's wide open. And he basically said, nope, everything's fine. I don't have a problem with higher prices. We'll keep supporting the market. Get that goddamn COVID vaccine going. And you can see the reaction from Risk. Risk is like, phew. And I think to a certain degree that's the same thing in crypto. Crypto has taken a bit of a punch in the nose here of late, though, so I think it's in cleanup mode. You know, when you fall a good 20-30% in value, you got to sort of stabilize the situation. So that's what I think's going on here right now. We had the dump, and I said the kids got punished for getting a little bit arrogant in this space. I think that's exactly what this was. Everybody squared up positions ahead of the Fed. Nobody wanted to take the chance just in case he said, nope, party's over. I think, and I said this yesterday in the video, I think that, the traders, they started to see some range. So they're like, okay, well, I can come in and buy against the bottom end of range, whatever. I wonder whether there's this bearish continuation pattern working here. That's what I'm thinking right now. So we had like a triple top come in here overnight, and the market broke into a bought fail level. If we roll over here, my hunch is, and get a nice close bar below that 25 level, I think this thing's alive and kicking. But it's not really doing anything right now. Just sort of big hurry up and do nothing. And I suppose like trendline traders, you could probably justify taking short shots off of that M there, because I think it did come in below a trend line. That's this kind of thinking. So we had this M and this M. So if we get any kind of M's, you can see below this line, there's a big honking M. So trendline traders take that. That was interesting. We had sort of the same scenario yesterday. And look how close the damn market came to that level. And we were even chatting in the lounge. There were lots of there was bullish divergences developing off this, like a 3-minute chart. Down in here, you could see the anecdotal evidence that the bear had just run out of steam coming down into this level. This is more just illustration than anything else. Had this been a live trade, I probably would have gone chicken shit on that bottom. And actually, we even mapped out what a 2-to-1 trade just buying that W against these lows looked like, and obviously that was hit. Overnight, we had a bit of an ABCD that took us back up against this trend line, and you can see here comes the structure and boosh. So I think this is still working. No, I mean, it really doesn't matter. This is more just sort of illustration purposes than anything else. This has been kind of a fun model. I've been walking the site people through, and it's actually interesting as we were going through this face rip. Just, and I remember I was going, oh, God, this goddamn market and all this, it's terrible. It's just one directional. It just won't consolidate. There's nothing I can do. I hate this market state. So this is a very, very low time frame chart. Maybe if we go to like an hour. There we go. So this is that setup working away. I mean, no setup is ever going to be right 100% of the time. Just get used to it, folks. Seriously. So if you fancy yourself a trader, it's entirely up to you. But anyway, there was that market where I just couldn't get any reason to get in. Just the W's just were not setting up for me. But, it's just the way it is. So actually relatively active reporting period. Then we went quiet. Now we're starting to get some setups starting to come in again. How you handled this setup with it coming so close to that 2-to-1 without getting hit, I don't know. I mean, you want to chalk it as a loss? I probably would for statistic purposes. It's not a bad illustration. And if I was teaching this sort of down the road, I would just simply say, look, at best, you probably should shoot for things like, so let's say 66%. That's a good number to work with. A lot of the floor traders I used to work with, they were happy with like 2-to-1 setups 55% of the time. And when I told them that I wanted to work with models that were at least 66%, they were like, 66%? What, are you crazy? So go figure. Are you ever going to be 100% right in this game? I doubt it. I really do. It's not natural. It's not, and I don't even think it's in your best interest to look to be right 100% of the time. You're setting yourself up for failure. So anyway, it is what it is. So latest little signaling from this fun little model I've been doing this quarter of trading with trend lines. Has us short from this M top, and our objective is probably a tag of this line down here. So we'll see how it goes. And we'll just keep tracking, following, plotting the data. If after the end of the study, and I might do this study for a month or two. Usually I don't like to judge a setup until I have at least a good 20, 30 inputs, and then we can go back and kind of see, okay, well, so how did it do? And, if it's batting more than 60%, 70% in that area, then it's a trade. It's a usable setup. So, blah, 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 blah. Probably mostly just rhetoric here today. Because we're kind of stuck in no man's land. I mean, is there anything to do there? No. I just talked to you about the day trade setup, so what's that? I actually do like this bot. That actually would speak well to me. So that would be shooting for a target down in about maybe 40 grand area. And of course that is a nice juicy reload zone. And actually this reload zone also aligns with a higher time frame, 38.2. So I love when you get those overlapping fib levels. And unfortunately, if I'm feeling this way about the big boys, can't imagine I'm going to be too excited about the little ones. We'll say that we had just the most beautiful presentation from a principal at Ubik yesterday, which is sort of like an Ethereum clone. And I already own a whack of it, but so it's not really like I need to go out and rush out and buy a whole bunch more. But I really like the story. The story, it's everything about the capitalist process and the way capitalism works. I think there's a catalyst here that could drive price dramatically over the next, say, 4 to 6 months. So that's always beneficial. As we said, the Fed doesn't even see any asset bubbles here, and they want to see a price inflation. So how high does crypto actually have to go for them to actually start saying, oh, gee whiz, there is some asset bubbles developing? Maybe pretty damn high. Be prepared, folks. The only problem here, of course, is you can't chase. Don't chase, don't chase, don't chase. You cannot come in on the buy side up here. You're just not allowed to do it. If I did want to be a buyer, you can see where the reload zone is. Top of value. Big old tails in here. I mean, this is kind of a fun one because really, I think I get the impression that they don't even want to deal with centralized exchanges. Centralized exchanges to this crypto community, I think, are actually dinosaurs. And keep in mind, that's how fast these guys think. How fast they move. In 5 years, you have gone from being brand new on the scene, infant, to a dinosaur. Wow. So the space is constantly evolving. And one angle I really like about these guys is that they can quite literally do everything that Ethereum does, just at a fraction of the cost. And then if they can get this catalyst that a lot of people in the industry are looking for, if they can get this catalyst over the next 3 or 4 months, Alex said, licked, then wow, the sky's the limit. I mean, and it's going to get like orgy-tastic again. So be prepared. The irony of it all is you actually look at a chart like this and you tell me, has this thing got any room to move up here? Would this be a place where maybe you could make substantial capital gains going forward? Keep in mind, it's only like 40 cents right now. Those all the highs there, that's, what is that? That's $8. That's a pretty big move. What happens if these guys actually go to new highs? Imagine that. Altcoins are going to go to new highs? I can guarantee you nobody was looking for... Well, all the zealots, but I don't think anybody called Ethereum to go up as high as it has here now. So why couldn't this thing go to new highs? Seems perfectly logical. I think I've told you before, the longer the channel, the bigger the something. Actually, I noticed that, Kevin. I don't know whether you're here, but I think the comments on the public video were turned off yesterday. So I love to quiz these people. So, but we can't quiz them if they can't post a comment. So I don't know. We probably should double check to make sure that the comments are enabled. So I think my basic premise is try and find fundamental stories. Stories that have the potential to grow. I like the Ubik story because, in essence, we already know Ethereum fees are huge. So if anybody can come along and be a competitor and basically do the same thing that Ethereum will do for you, why would you pay the high Ethereum fees when you can just do the same thing on the Ubik chain? Seems logical to me. So, ironically enough, the environment is ripe for a lot of these altcoins. Just the problem is, don't chase. These things are insanely volatile. So you go and chase and you think, hey, well, it'll just keep going, and you might be trapped in a shitty trade like, the Doge people here for a long time. So don't chase. Don't do it. Just try and buy the W's and then sell. Because they're so volatile, just try and sell half on a double. Once you get into that risk-free trade, who cares about the rest? You want to just forget about it and come back in 5 years, see what happened? Oh, no skin. I mean, there's nothing wrong with that strategy. So, oh, hey, look at that. I might have bought some XTC. That's kind of cool. Didn't notice that. I should go check out the account. I've been wanting to get in on this thing. You can see I threw in a bid down at 78.6. I should see whether I got filled there. That's kind of cool. Oh, I didn't realize that came down there yesterday. Cool. All right. So, that's the kind of thing that I would buy. It's the exact opposite. I'm chasing these things down. When they're collapsing, that's when I'll step in and buy. I do literally the exact... I told you yesterday. I do the exact opposite. When everybody out there, the public, is going ape shit, I'm selling. And when everybody's dumping this shit and they don't want it, I'm buying. Don't do what Donnie Don't does. Right? I don't know. Anyway, so there you go. There's a graphic illustration of buying against lows. No idea whether that's going to hold in. But ironically enough, the odds of me actually getting a double off, I mean, look at this chart. What are the odds of this thing? What the hell number is that? 658. So 1,200. Where the hell's 12? 1,200's right here. What are the odds of this thing trading back up into here sometime over the next 6-8 months? I'd say probably pretty good. So I like it. I love these kind of trades. It's just so pretty. So, and actually, we probably could have drawn that up off of there. So that looks to me like a sick ass. That's almost like, remember I keep telling you about Kavarkanator and his insane Bitcoin trade. Actually, hey, Kavarkanator, I think I got one of your trades on the books here. Look at that son of a bitch. So that's almost the same kind of thinking as I show you about Kevin coming in and buying 88.6 off the original bottom on Bitcoin. Probably not the same, but similar. So anyway, kind of cool. Buying when they're crying and selling when they're yelling. So kind of rhetoric-y day today. I apologize. I just don't have that many ideas that I'm just like, oh my God, I gotta buy that now. We did have our TRISOF meeting last night, and that was a lot of fun. I guess that's over here. Kevin spent some time going through the daily brief today, going through some of the names. I have to say, there's actually a few names there that we reviewed in last night's meeting that, frankly, I think they're buyable right now if you wanted to go and buy them. But I'm not going to let you know until after I get my fills. Look at that. Some of them are already starting to run away. Poly. Look at Poly. Oh, my goodness. This is a funny stock. I had a client of mine who bought this stock at 12 cents a share. We were looking at the daily brief today. I bought this stock from, I think it was 2000, and I thought it was 1999, but it turns out actually it was 2001, 2002. So I guess my memory's getting a little cloudy. But this stock... He bought the stock down at the bottom and he rode it all the way up, and frankly speaking, I don't even know what happened to him. But we stepped in here at 12 cents a share, And on a split adjusted basis, you can see it went all the way up to 50, $60 a share. So he did pretty darn well. Okay, I thought it was fascinating that the kids actually pulled this up on their screeners. And I mean, look at that. That looks like a pretty damn good looking bottom. So, but can't buy that there. I've got some bids working down in these reload zones. So I'll see if we get lucky. Wish me luck. All right, I think I'm going to leave it at that for today. Slow and steady wins the race, as they always say. Risk on. Still looks like it's on. Fed did not shit on the party, so you can see how much green is on the screen here. All right, everybody. Have yourselves a great day. All the best, and bye for now.